Morning everyone, today I will be presenting Pardini Holding Beras, one of the most established fashion retailers in Malaysia. Pardini Holding Beras is listed on Bursa Malaysia under the stock code 7052 and it operates primarily in the apparel and fashion retail industry. The company business model is vertically integrated, meaning it controls multiple stages of its value chain, including product design, merchandising, distribution, and retail sales. This allows Pardini to maintain quality control and manage costs effectively. Pardini owns several well-known brands. These include Pardini and C for men's and women's fashion, Vinci for footwear and accessory, P&Co and PDI for casual wear, and Mickey for children's clothing. Through these brands, Pardini serves a wide range of customers across different age groups and lifestyle. In terms of industry classification, Pardini belongs to the consumer discretionary sector, especially the apparel, footwear, and fashion retail industry. Regarding market position, Pardini is recognized as one of the leading local fashion retailers in Malaysia. Its key strength is its value for money strategy, offering fashionable products at affordable price. This has helped the company build strong brand loyalty, particularly among middle-income consumers. As a result, Pardini is able to compete effectively against international brands such as H&M, Uniqlo, and Cotton On. Looking at recent development, the company has shown signs of recovery after the post-pandemic period. A stronger Malaysian ringgit has reduced import costs, while better product mix, especially in activewear, has improved profit margins. In addition, Pardini maintains a strong balance sheet with a low debt level, providing financial stability for future growth. In conclusion, Pardini is a well-established market leader with strong brand recognition, stable operation, and solid financial strength. Now we will discuss the economic outlook and how it affects Pardini Holding Beras. As a consumer retail company, Pardini performance is closely linked to the overall health of the Malaysian economy. Three important economic factors are interest rate, inflation, and GDP growth. First, let's look at the interest rate. The overnight policy rate, or OPR, set by Bank Negara Malaysia is currently 2.75%. Lower and stable interest rate reduce borrowing costs for both business and consumers. This encourages spending and boosts consumer confidence. For Pardini, this means customers are more willing to spend on non-essential products such as clothing and fashion items. Second is inflation. Malaysia's inflation rate remains relatively low at around 1.4%. Moderate inflation is beneficial because it helps control operating expenses such as labor, rental, and logistic costs. At the same time, consumers maintain stronger purchasing power, allow them to continue spending on lifestyle and fashion products. Third is GDP growth. Malaysia's economy grew by approximately 5.2% in 2025, and growth is expected to remain healthy at around 4 to 4.5% in 2026. Economic growth generally leads to higher employment levels, increased income, and stronger consumer confidence. This directly benefits retailers like Pardini by increasing customer traffic and sales revenue. Overall, the current economic environment is supportive for Pardini. Stable interest rate, low inflation, and positive economic growth create favorable conditions for consumer spending. Therefore, based on the macroeconomic outlook, the current economic condition is favorable for investing in Pardini Holding Beras. Thank you.
Hi everyone, I will talk about the Section 3 Industry Outlook Analysis on Pardini Holding Beras. So the Malaysia's apparel industry is struggling. Earning dropped 23% yearly over the past 3 years while costs keep rising. But recovery is coming with 13% growth expected. Pardini plans slow, steady growth through better marketing and strong upgrade, not aggressive expansions. And the competition is true with over 50 brands. Pardini face big brands like H&M and Cotton On. and costs like rent and wages are sequencing profit. But Pardini say strong by targeting values consistent middle income shopper with popular brands like Pardini Seeds and Mincy. The opportunities exist. More people want affordable fashions, which helps Pardini with 905 million ringgit in cash. Pardini can negotiate a better price from China supplier. Is also selling more activate and upgrading store. Risks included the MACC investigations, online competitions, and risk costs. Is this industry attractive? Yes, but only the strong player. Pardini has three strengths: goods value positioning, strong finance with 905 million cash ringgit, and the cheap stock with PE of 9.7x. Pardini is a survivor that can weather industry storm. So now I will talk about section 4 on Pardini financials performed from 2023 to 2025. We analyze 4 key ratios. First, earning per share drops from RM 0.34 in 2023 to 0.22 in 2024, then recovers to 0.24 in 2025. This shows the company had a thought years but is bouncing back. So second, returns on equity falls from 21.4% to 13.2% and stays around 13.1% in 2025, while lower than a recovery year. It is still respectable for a retail company. So third, the price to earning ratios went up to 15.2 times in 2024 and then dropped to 12.9 times in 2025. So this struggles that stock is not fairly priced. Fourth, the dividends yield jumped to 5.58% in 2025. So this is Pardini's strongest point, offering great returns for income seeking investor. And overall, we rate Pardini as a moderate, but with positive thing, performance profits margin are improved from 35.3% to 41%. The company has strong cash of RM 748 million. Analysts at Carnegie and MIDF have updated the stock to outperformance and buy. Pardini is attractive for 3 reasons: good dividends of 5 to 6%, improving financial health, and fair pricing. Is a safe long-term choice for investors weighting both income and growth.
And this and Pardini Holdings generally uses historical closing stock prices from Yahoo Finance to evaluate the company's returns and investment risk. So this table shows daily closing prices of Pardini Holdings along with the calculated daily returns and daily percentage, as you can see. Daily rating measures how much the stock price changes from one trading day to the next. I went through 43 trading days. So number of daily returns is 42. The average daily return is negative 0.29%. The standard deviation of daily returns is 2.12%. And the holding period return is 6.83%, and risk level is high risk. Return risk judgment: high risk with mixed return, indicating volatile but moderately positive risk return trade-off over the period. Over the 2 months period analyzed, which is from 13th of April 2026 to 12th of June 2026, Aldini Holdings showed a highly volatile performance with a standard deviation of 2.12%, indicating high risk, while averaging daily return of negative 0.29, suggesting a weak short-term performance despite a positive holding period return of 6.83%. The stock experienced daily fluctuations but still generated an overall gain across the period. This reflects a mixed but favorable risk-return outcome, where investors were exposed to high volatility in exchange for a moderate return over the investment period.
Next, I will discuss the technical trend observation of Pardini Holding Bras. Based on stock price movement over the last 2 to 3 months, Pardini is currently showing a sideways or consolidation trend. This means that the stock price is moving within a relatively narrow range without establishing a clear upward and downward direction. The stock is now consistently forming higher highs and higher lows, which would indicate an uptrend. Similarly, it is not forming lower highs and lower lows, which would suggest a downtrend. Looking at technical indicators, the 20 days moving average and 50 days moving average have remained relatively flat during this period. The absence of a strong crossover signal indicates that buying and selling pressure are currently balanced. In addition, support and resistance level have become clearly visible. The stock repeatedly rebounds near support level and face selling pressure near resistance level. This behavior creates a horizontal trading channel, which is typical during a consolidation phase. From an investment timing perspective, this is currently no strong breakout signal. Therefore, the stock may be not attractive for short-term traders who are looking for quick price movement. However, for medium and long-term investors, this consolidation phase may provide an opportunity to gradually accumulate shares at relatively stable price. When combined with Pardini's strong fundamentals, healthy cash position, and an attractive dividend yield, the stock remains appearing as a long-term investment. In conclusion, while Pardini may not offer strong short-term trading opportunities, it appears suitable for medium to long-term investors who are willing to wait for future growth catalysts and potential price appreciation.
Next, I will go through the final investment recommendation. So, based on the analysis of economic condition, industry, financial, and technical and risk and return analysis, my final investment recommendation for Pardini Holdings Berhad is to hold with positive long-term outlook. Malaysia's stable economic environment supports consumer spending, while Pardini maintains a strong market position, healthy financial fundamentals, and an attractive dividend yield. The company currently shows only moderate growth and limited short-term price momentum. In addition, the risk and return analysis indicates relative high volatility, making the stock less suitable for aggressive short-term trading strategies. Therefore, existing investors are recommended to hold the stock for long-term value and dividend income, while new investors may wait for stronger growth signals before increasing their investment exposure. Thank you.